You're welcome, guys. You're very welcome. In today's section, I'm going to be explaining market structure from beginners to pro. I'm going to also show you how the market algorithm works. So, if you know how to trade market structure, if you understand market structure, then you are going to be able to understand the algorithm of how the market moves. So, if you look at this diagram here, you can see that price is trending up. It's going from higher low, higher high, higher low, higher high, higher low. So whenever the price is printing series of higher highs and higher low, that is, we are actually in an uptrend. And you can see that price was moving up from here, came down to form a higher low, and then price break the previous higher high to the upside. So this is a break of structure. This BOS means break of structure. So when price keeps breaking the higher high, it forms a break of structure. So this is an indication that price is still trending up. So as long as price keeps breaking the previous higher high, we are in an uptrend. So you can see that price is breaking the previous higher high. So we are going up, breaking structure to the upside. So, and as we all know that price can't keep going up forever, like whatever goes up will surely come down. So there is a certain pattern that we look out for to know if price is about to change trend from uptrend to downtrend. So we call it the market structure shift. So price is going to shift structure from uptrend to downtrend. So now you can see that price was printing higher high, higher low, higher highs. So whenever price violates the higher low, that is, we have now changed structure from um uptrend to downtrend. So you can see that this higher low was violated by this guy. So now we now mark this out. So this is the market structure shift. So now we are now looking for how to sell. Let's say we're actually buying, we're trending up. So once price violate the higher low, so this is an indication that price is about to shift structure from the bullish to bearish. And so you can see that after price shifted the structure, you can see that on the other scenario of a downtrend, what we are going to be seeing is lower low and lower highs. So price is going to keep printing series of lower lows and lower highs. So you can see that this is a lower low, this is a lower high, this is a lower low, this is a lower high, and as long as price keeps breaking the previous lower low, it means we are still trending downward. So you can see that price went up and created a lower high, price came back and broke the previous lower low. So this is a break of structure here. So we are still in a bearish structure. So you can see that price went up and created a lower high, price retraced back and violated the previous lower low. This is a break of structure. So that's how price is going to keep printing downward and breaking the previous lower low until price violates the lower high here. That is when we are going to know that price is about to shift structure from bearish to bullish. So once this lower high is violated, this becomes a market structure shift. So price will turn back and print a um, um, higher low around the discounted level. Then price is gonna keep printing higher highs, higher low, and that. So that's for structure. So um how do we know a valid um, pullback? In my own idea, what I see that once price have a three candle close, that is a valid pullback. So most of the times when we are not sure of the pullback and we get involved in a trade in a wrong pullback, we are gonna get stopped out. So we need to know if the pullback that we are seeing is actually the correct one. So let me go to the main chart so you can see. So the way it is here, it is actually this is a textbook market structure. The way it is here, as clean as it is and simple as it is on this diagram, I want you to know that this is not how it's going to be on the live chart. On the live chart, things are going to be different. You're going to see some chunky price action, and it's not going to be smooth as this. So let me show you an example of what I mean by that. So if you look at this price action now, you can see that we are actually trending downward. You can see here, see price is trending downward. So we are actually bearish. So how do I know this? Is that you see this higher low, this lower low here. See, price went up and created a lower high. Price retraced back and violated this previous lower low. So this is a break of structure. Price has violated this structure here. So price has broken structure. Price retraced back to a lower high. Price retraced back and violated this lower low here. So as long as price keeps breaking structure to the downside, we are actually downtrend. We are actually bearish. So we only look for sells whenever we are in a bearish trend, and we only look for buy whenever we are in a bullish trend. So we only sell in a downtrend and we only buy in an uptrend. So there's a saying that says that you don't go against the trend. So the trend is our best friend. So when we identify the trend, the current trend of the market from the higher time frame, then we know the direction of the market. So we look for trade entries that to trade alongside with the trend. So that's what we mean by the trend is always your friend. So you can see that we are actually going down. We are breaking structure. As long as we keep breaking structure to the downside, we are actually bearish. And like I said before, how do we know a valid how do we know a valid structure? You can see that right here you see that this when price broke this structure here, you can see that the pullback is okay. Let's count it. One, let's count this candle. You can see this candle here. One, two, three. You can see that the candle here is more than three. So this is a valid pullback, and so we mark that out, and you can see that this pullback again. You can see one, two, three, so and it's even four candle closure. So this is a valid pullback. So um so you can see you can see coming down, and like I said before, price cannot keep selling forever. It's gonna come to a point where it will want to shift structure. It will want to change a structure from selling to buying. So that is from bearish to bullish. And how do we identify when price is about to shift structure? We know this by price is going to shift. It's going to do a market structure shift, meaning that you see this was the lower high here, this is the lower low here. Price violated this previous lower low, so this is a lower high, this is a lower low here. So this is a lower low, this is a lower high. So once price violated the lower high, that's the market structure shift. So when price does that here, you can see that this becomes a market structure shift. Market structure shift. um So you can see that price, after price does this shift, see that the market now started trending up. You can see that price violated this low, this high here. We trace back, it violated this one here. See, it keeps breaking structure to the upside. So we are actually bullish now. So you can see our price keep printing, see, breaking structure to the upside. So like I said, price will not keep buying forever. If price want to change structure from uptrend to the downtrend, price is going to have do a market structure shift. Like I said before, this is higher high, higher low, higher high, break of structure. Price violated this high here, so this is a break of structure to the upside. So we are still bullish. We are still bullish because price keep breaking structure to the upside. So now price violated this high here, this higher high here. We trace back, violated this one here again. So this is a break of structure. So you can see after price does this break of structure, this is our lower, um this is our higher low, right? And like I said before, when price violates the higher low on the uptrend scenario, that is a market structure shift. So you can see that after price went up, after price broke this structure here, price went up and price retraced back and violated this low here, this higher low. So this now becomes a market structure shift. So what price will do, that price is going to be a pullback to at least 50% of this entire um structure, and then price will start selling. You can see, you can see. So price sold. So this is how market structure works. You can see how the chart is not that clear like the one I drew on the diagram, but this is how it is. So this, when you see price trending downward, so this is a bearish scenario. So there's also what we call the trend line. The trend line. So we have the uptrend, and I said we have the downtrend. So um how do we identify a trend? A trend. You can see that if I want to draw a trend line correctly, I want my trend line to have at least three touches. See, one, two, three. So for example, now I want to draw my trend line. I want to know where the market is trending. So I'll bring out my line tools, then I'll draw from here, I'll mark it out from here, I'll mark it out to here. So you can see that if I want to count how many times that the chart touch this my trend line, you can see that this is a one, two, three, even this one four. So this is a valid trend line. And for those that trade trend line breakout, so you can see that after price broke out from this, you can see that price retraced back a bit and then price started buying. And so some people, this how they trade, they do trend line. So once price break out from the trend line, they either buy or sell depending on the current trend that they are actually observing. So let me show you another trend line again. Like I said, you need to know how to draw a trend line. So you can see that this line is going up. So this is an uptrend. So you can see that this is a support zone. So like we have support and resistance. So on the support and resistance, we have this support at the down and we have resistance at the up. So when price gets to a resistance zone, we look for sell. So you see that price is on the support here, we sell, come down to here, we buy, we sell, we buy, so we sell. So once the price breaks out from this place, and so on the trend line. Trend line also serve as support and resistance. Like for example, now you see that, like I said, the support is always downwards. So when I draw my trend line this way, and I said that my trend line, I want to see I want to see my trend line have at least three touches. So we see the one, we have one here, we have two, and we have three. So now this is a support zone. So when price breaks out of this trend line, it means that this support zone has been violated. So, and what do we see on this trend line? These are called liquidity. A lot of people are setting their stop loss around this zone, so price is likely to take out this trend line and violates a lot of stop loss that are in this place. So I'm going to be explaining that in the liquidity class. So I'll be explaining how liquidity works and how we can take our trade based on the knowledge that we have on liquidity. So I've explained market structure. Um, Also, I've explained a break of structure, market structure shift. So I want to be showing you guys what we call demand and supply. So on our chart, our demand is at the bottom and our supply is always at the top. So when we have a supply, we want to be selling at the supply zone and we want to be buying at the demand zone. So I'm looking for a diagram. I'm looking for a chart that I can show you guys for an example. Okay. Okay. Particular diagram here on this chart, you can see that price violated this previous lower low. So like I said, on a downtrend, as long as price keeps violating the lower low, we are currently bearish because we're breaking structure to the downside. So what we are going to do is that we are going to, after price violate and break this structure here, what we are going to do is that we're going to be marking out our zones. So like I said, our supply zone is always at the top. Change this. Yeah, demand my supply zone. So I want to be selling at my supply zone. I want to be selling when price comes to my supply zone. So you know that when price broke out, the force that price used to violate this previous low, it means the sellers are actually in charge. So when the sellers are actually in charge, price is going to retrace back to fill up the remaining orders that was not filled while price was doing this massive sell. So what I would do is that I'm going to mark out that zone. So this is an indication that the smart money are actually in the market. So I'm going to mark out that zone, that my zone of my supply zone. I'm going to wait for price to come back to my supply zone so I can sell. So you can see how price, after price goes to my supply zone, you can see that after price will trace back to my supply zone and price tapped in there. So if I wanted to get involved in this trade after marking up my supply zone, I'm gonna set my entry around that zone. I'm gonna set my take profit right below this previous lower low. So that's gonna be my target because that's the nearest draw of liquidity. That's where another price is gonna run to first. So you see that after waiting for price to retrace back, and then price now tapped into my entry and I sold from there. I target this place as my take profit. So this is how you capitalize in market structure. As long as you get your market structure correctly, because sometimes there might be manipulation on market structure, so they can lure people to enter into the wrong trade and you get liquidated. So as long as your market structure analysis is correct, you can take your trades like this and still make money from the market. Let me show you another example right here. Um, so you can see that here again. You can see that after price violated, after price went up, price came back and violated this previous lower low that was here. You know, I said that higher highs, higher low. Whenever we are in a downtrend, we are looking for lower low and lower highs. So as long as the lower low, this is a lower low, this is a lower high, as long as the lower low keeps being broken, especially the force, when the low, when it, as long as it keeps breaking, we are breaking structure to the downside, so it means we are still bearish. So as I am a trader, what I want to do is that after I see this move, I want to look for how to get involved in this trade. And how do I do that? I want to be looking for how to sell because price is currently trending down. So I want to trade alongside with the trend. So what I will do is that I'm looking for how I can get involved in this trade. So what I will do is that I will mark out my zone, my supply zone there. I'll mark it out. So I want price to retrace back to somewhere around that zone before I capitalize and sell from there. So you can see that price will retrace back to that zone. Boom. So you can see how immediately price got to that zone. I will put my entry here. If I'm live on this trade, I will set my stop loss right above here, and then I'll be targeting the nearest, the lower low that was created before price did a pullback. So like I said, when price does a break of structure, price is going to pull back to at least 50% of this entire structure. So let me explain something also about structure. So there's what we call internal structure and external structure. Um, Let me do something like this. So you see this after price did this created this lower low here, price did a pullback and created a lower high, and then price violated this lower low, so this becomes a break of structure. So now what I want to do now is that I want to know my current trading range. So where is my current trading range now? You can see this from here. Let me bring out this box. From here to here is my current trading range. Anything that is happening inside this zone is called internal structure. As long as price don't break above this high here and it doesn't come down above this zone here, so this becomes our structure, our internal structure. Why this here, from here to here is our external structure. So our external structure is bearish already. It has already broken structure here. Our external structure is bearish. We all know that price is going to do a pullback. It's going to correct itself and then it's going to break structure again. So what I want to do is that as long as price, anything that is happening inside this place is my internal structure. So why this here is my external structure from the higher time frame. So what I want to do is that I want price to align, I want the internal structure to align with the external structure here, which is bearish already. So let me play this out. Okay. So you can see that you can see all this movement that is happening, like this box that I do now. You can see that all this movement that's happening here is internal structure, internal structure. So I want price to, I want this after price does this pullback, price is like pulling back to correct itself. So I want price to align with the external structure so I can sell. On the external structure we are bearish, while on the internal structure we are currently bullish. So if you are a trader that is not well informed about market structure, you are going to see, because price is doing this temporary bullish movement, you are going to feel if the price is currently uptrend. Meanwhile, you fail to look at the external structure, which is telling us that price is bearish. So I will not take any trade now until I see sign that the internal structure is about to align with the external structure bearish. So what I will do is that I'll wait patiently. So you can see, boom. So you can see now that price is about to align with the external structure, which is bearish. So if I go to my lower time frame, I'm going to be seeing a market structure shift that aligns with this break of structure. With time, I'm going to be explaining that, but on this class, I want to explain external structure and internal structure. So let's say I see this movement now, I can now sell from here, okay, and then I will target this place here. So so you can see, my my internal structure my internal structure is now aligning with my external structure. Before it was going up. So you would think maybe price is bullish because of this temporary correction that is doing, and you can now start buying, and then you now get stopped out here. So now price now has now aligned with the external structure. So you need to be informed about this algorithm, about structure, market structure, the external structure and the internal structure, which is very, very important, that you need to know the structure you are trading, if you are trading internal or external structure. So what we do is that we use the external structure to know the direction, and then we go and look at the internal structure to get and look for when price is about to align, when the internal structure is about to align with the external structure. So you can see this massive movement. So you can see this particular trade. I took this particular trade live. You can see just following simple market structure. Make just be simple. Just after price does this break of structure, this is my external structure. So this correction, anything that is happening inside this correction, inside this range from year to year, anything that's happening inside this box is internal structure. Simple as that. Same thing applicable if it is a bullish trend. If it is a bullish trend, so you're gonna see something like this, boom, boom. You can see this massive movement. You can see that price broke a structure. So this movement here is our external structure. So the internal structure is going to be doing something like this. It's going to try to correct itself, to somewhere around here. Then it's going to be buying from somewhere around here, and boom. So anything that's happening around here now is internal structure. So it's going to have, so I'm going to be buying around here. I'm targeting this liquidity above this high here. targeting the as my target. So you can see that this box now, let me draw the box so you can see. As price does this first break of structure here, boom. So this year, from this swing low here to this swing high here, this box, anything that is happening inside this zone is my internal structure. So what I want is I want price to align with my external structure, the internal structure to align with the external structure. Then um, we we buy alongside with it. So it's as simple as that. Keeping it simple, and so that's how you trade your structure. So I'm gonna be showing you guys the swing low and swing high. So I'm gonna be giving you guys an example of how swing low and swing high is. Okay, let's say this is let's say price is busy selling, 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 and price want to change structure. So there's what we call swing point and swing. Um, so we call it swing point. We have swing high and swing low. So on the swing high, let's say price was buying. Okay, let's say a price was selling, 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 selling. So price got to a particular level. Price is going to do a swing high. So that swing point is where price want to shift, change structure and start buying. So if you see this kind of chart pattern on a particular key level, and you know that that is a sign of either buy or sell. If it's a swing high, you want to be buying. If it's a swing low, you want to be selling. So this is how swing buy, swing high looks like. Don't mind my drawings, just trying to get this right. It might not be that accurate, but just gonna manage it like that. So let me do this as should be blue. So as you can see, so when you see this long candle here is called wick. So this is um the bearish candle that was coming, and then this becomes a wick. So this wick is like a sweep of liquidity. This wick sweep this bearish low here. Immediately it did that, it's now engulfed above this guy, this bearish candle. So that after this sweep, after this week is a sweep of liquidity, then price does this, and this is a swing point. So if I want to enter this trade after this swing point, I'm going to be entering this trade at this zone. I'll be entering this trade at the close of this third candle. Once this third candle closes and start printing the fourth candle, I'm going to be entering there, and I'll be setting my stop loss below this third candle, and then I'll be targeting somewhere around a significant level that, or a zone that I've spotted on my chart. I'm targeting that zone. So sometimes if this third candle is not that far from this wick, from this second candle, you can just put your stop loss below this second candles and allow to stay safe. But if it is far, if this third candle is far away from this second candle, you can just set your stop loss below this third candle and target your POI. So let me now show you how swing low looks like. So you can see that this is this and that one here, and then I'll draw the third one here. Yeah, okay. So I want this to be red. So I want this to be okay, dark blue. So I want this to be red also. So you can see the same thing. So this third one, this one is like a wick. Then this engulf this first candle here. So like I said, so this is a swing, this is a swing low. So whenever you see this on a chart, you see this chart pattern, just know that it's not every time you see this kind of pattern that you start to enter buy or sell. It needs to be an additional confluence. It needs to be in some key levels. It's not on any random chart you see a swing low and swing high that you take the trade or other buy or sell. So it needs to be in a key level, it needs to be on it needs to be in your confluence, so you don't just take it randomly. And so that's how to trade swing, that's how to identify your swing points. Um so like I said, I've shown you guys support and resistance. So that should be all for now on market structure. When we go further in this class, I'm going to be showing you guys more on market structure and how to identify key levels, how to spot order blocks, and the liquidity concept. But on market structure, this is all. This is how you trade your market structure. So if I'm to do a quick recap on that, on market structure, you are gonna see that, um, like I said, the market structure itself is just based on higher highs and higher lows, and also lower lows and lower high. So we as long as price keeps trending and breaking the previous high, we are actually bullish. But as long as price keeps breaking the previous low, we are bearish. So the higher highs and higher lows, and so that is all you need to know on market structure. And like I said, we have the internal structure and we have the external structure. So we use the external structure to know where the direction of the market is. So we go to our internal structure and look for entries on the pullback and look for how we can, partake in that current price action so we can make money from it. The good thing about trading is you can either make money buying or selling. As long as your analysis is correct, you can buy or sell and still make your money. So when we say um, price is bullish, it means we are buying, we are uptrend. When we say price is bearish, it means we are downtrend, we are selling. So those are the kind of jargons that you need to be aware of. And so that should be all for today's section. I'm going to be explaining more about technical analysis on previous class. So bye for now, and make sure you go into your charts now and start marking break of structure. I want you to go into your chart, go to your trading view, go and backtest, go and mark as many break of structure as you know, as you can spot on chart, so you can get familiar with it. Mark your higher highs and your higher lows, and your lower lows and your lower low. And then you, after doing that, I want you to send me that your chart screenshot on my contact, so I can see and be able to correct your mistakes. So make sure you do this. Also, I want you to mark out your trend lines. Like I said, a valid trend line must have three touches. So, and I said that your trend line can also serve as your support or resistance. So, that is all for today's section. That's all for today. today's section. So we are gonna do more on the next class. So see you guys. Bye.